Let's take a look at your market news now. Most Asian markets rose this morning, with energy firms surging along with oil prices as traders await the conclusion of a key Federal Reserve policy meeting. While worries about the China-US trade war continue to erode confidence, the strong US economy and healthy corporate outlook are providing some buoyancy for now. The weekend decision by major producers from inside and outside OPEC to maintain output, despite US President Donald Trump's call for lower prices, have sent both the main contracts sharply higher this week. It's back to normal with the all stocks trading today, with the Tokyo's and Nikkei gaining 0.4% to 24,033. The Hang Seng in Hong Kong gained 1.5% to 27,908. Shanghai's composite index was almost 1% to the good, closing out at 2,806. The Dow and S&P 500 ended lower on Tuesday as a boost from the energy sector and strong consumer confidence data was offset by losses in chip makers and utilities ahead of an expected Federal Reserve interest rate hike. The industrial average fell 0.25% to 26,492, with the S&P 500 losing just over 0.1%, while the Nasdaq Composite added 0.2%. Let's go back to Arabile at the Johannesburg Stock Exchange for a more in-depth look at the markets now. Good afternoon, Arabile. Over to you.
Yeah, good afternoon, Zinga. Again, 0.1% to the good for the JSE All Share. As you saw moments ago, chatting to the CEO of Capitec, highlighting a good set of earnings when you take a look at the remainder of the banks as well. A lot of them seeing their growth perhaps coming from the rest of the continent. Capitec not necessarily being so lucky, but still managing to do fairly well. So we'll unpack that in a moment or two. As well, the price of the rand doing fairly well and maintaining some sense of stability. So we'll unpack exactly what is moving markets on that front, and just over $80 a barrel again for the price of oil. But for now, let's take a look at the rest of the European and local markets. Michael Traherne from Vestag Asset Management joining me now as we unpack those earnings as well. Earnings news, big data, 3%. So we're clearly liking the data, aren't we?
Yeah, very good. I mean, the bank growing at 20% in a recessionary environment. Normally banks and the overall economy move in steps. So Capitec clearly bucking the trend. And I think it's consumers saying, look, we like the value that Capitec offers us, and we're going to shift our banking from your big four to Capitec, although I suppose Capitec you can actually call part of the big four now. Yeah. But 110,000 new accounts a month. I mean, that number is just a bit mind-boggling.
I mean, if they continue in that way, that would mean that you've gotten at least around 1.2 million customers in 1 year. Is that sustainable?
Yeah, I mean, I don't know if we're talking off air or he was answering your question on air, how long that is sustainable. They said they're aiming at about 12 to 13 million customers. Currently at 10.5 million customers, so they clearly think it's sustainable at least for the next 2 or 3 years. And I think they've got a better forecast than I can. Having a look though, I had a look what their numbers were 10 years ago. So customers, 1.3 billion, they're now 1.3 million, now 10.5 million. It's not bad for 10 years. Yeah. And then the overall profits 10 years ago, their full year was 212 million rand profit. Now for 6 months, they made a profit of 2.5 billion. So that's why the share price has done so well. In 2008, you could have bought them for 20 odd rand. Now it's going for 1,000 rand a share. So if you were lucky enough to own them 10 years ago.
10 years, they've grown tenfold, essentially.
More than tenfold.
Yeah, which is essentially the sentiment here. Should one be worried, however? You know, we've gotten credit issues across the country for quite some time, and I did ask him whether, you know, he's able to maintain that part of the business and ensure that it doesn't go out of hand. Do you think there's any worry with regards to Capitec's credit business?
I think they manage their credit business very well. In their current set of results, they said actually bad debts came down and money recovered from previously bad debts was up. So both those metrics moving in the right direction. But yes, as you move into a recession, your creditors or the people you've lent money to, their credit records come under strain. Mr. Free was also alluding to the fact that they're seeing less bonuses come through, but that's what Capitec's key is. They get access to that data and they understand the consumer they're lending their money to. As far as Capitec goes as an investment, they have about 3 times their price or PE ratio is about 3 times at your traditional banks. So market definitely likes it a lot more. It might be a bit too expensive for most people though.
Yeah, because I was about to actually ask that. I mean, you know, compared to the remainder of the banks, for value, does it offer the kind of value you'd really require?
No, they're priced as a growth stock, and to be priced as a growth stock, they're going to have to keep delivering these 20% returns year in and year out. And as you get bigger, you reach saturation and it gets a lot more difficult. So, look, I don't think you're going to see it at 10,000 Rand in the next 10 years like we did over the last 10. But I think it's a feel-good stock to own if you do own it, knowing that you're part of helping the lower LSMs with banking, moving money from under mattresses into the banking sector. Yeah,
quite interesting. Well, nearly 0.2% up for the JSE today. The US dollar costing 14 Rand and 29 cents. The trade issues around the globe are certainly a sentiment that continues as well. General market movement is probably fearful of what the Fed might do as well. A little tentative, shall we say.
Yeah, so this evening, Fed's just had 2 days of meeting. This evening, they're going to come out and tell us more than likely that they're going to raise interest rates in the US. Markets are expecting that. What markets are going to really be looking at is what is the tone that's delivered by Mr. Powell when he delivers a 25% or 25 basis points rise. Where does he indicate we go from here? And I think that's where the market's going to be focused on more than the actual raise-in rates. The raise-in rates has already been factored into asset prices. What we don't know is where the Fed sees us going from here. I think you still see maybe another rate hike this year and then a couple next year, and then we get back to more normal levels. But as you do that, the dollar becomes more and more attractive, particularly as Europe continues to be on a very stimulus-driven monetary policy. You should probably see more money flowing out of the EU and into the US, and potentially out of emerging markets and into the US.
That's my next question. 14.29. Do we not face the risk of getting that positivity out of the United States, so weakness out of the South African rand, and that figure potentially going worse and going to around 14.50 or so?
Yeah, it's definitely on the cards. It all comes down to the wording that's used in the policy. If they say that we're going to be very aggressive and raise rates quicker than the market expects, you're going to see a rush of money into the US dollar. If they indicate that they're going to keep lower for longer, which is the current trend we're on, then you see probably the dollar actually weaken a bit. Analysts are forecasting a lot more what they call hawkish tone, where you're attacking this interest rate. So it all depends on the tone. It's amazing that tone gets to drive markets and a pillar like the dollar.
It's all a feelings game, right? Much the same as Brent crude, still above $80 a barrel. Donald Trump saying one thing, OPEC saying you're not going to tell us what to do, and clearly that driving that price now firmly above that $80 a barrel mark. Does it stay there?
Yeah, look, some analysts are now calling for 100. I remember 2 years ago when analysts were calling for 30. So very, very difficult to forecast. This evening we get crude inventory numbers out of the US, and that will show us where demand and supply is sitting. With the US being a very big producer and a very big user of crude, whatever their inventory levels are, it's a nice barometer for the rest of the world. So that will drive interest or crude oil prices at least for the next couple of days. But I think as a consumer, you more want stability. Obviously, you want low prices, but stability means more over the long run. And if we stay stable at 80, potentially you see the frackers come to the fore. The biggest problem in the US is not getting the oil out the ground, it's getting the oil to ports. And the US doesn't have that infrastructure in place, but every day they add more to the infrastructure, and over time those bottlenecks are going to be loosened, and hopefully that means oil prices come down, and consumers, particularly in South Africa, we see lower inflation and no interest rate hikes.
One can certainly hope. Still above $80 a barrel, though, is the price of oil. That is Michael Traherne from Vestec Asset Management. That's where the buck stops this afternoon. Keep a lookout on the markets. Do note that things do continue to happen. A 58th month of a downward phase in South Africa's business cycle, the longest since 1945. Keep a lookout for that as well. Nzinga Mpumelelo joining you right after this.